a.m. right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning live on Channels Television. Well, thank God it's Friday. I'm Ladi Williams. Let's take a look at what's happening in the markets. We see oil prices climb for a third straight session. Today, shrugging off concerns about global economic growth as worries about tightening supplies underpin prices that have an impending European Union embargo on Russian oil. Brent futures rose 84 cents to $111.74 a barrel in early trade, while U.S. West Texas Intermediate crude climbed 80 cents to $109.06 a barrel. Brent and WTI on a track to rise for a second week in a row, buoyed by the EU's proposal to phase out supplies of Russian crude oil, 6 months, and refined products by the end of 2022. Would also ban all shipping and insurance services for transporting Russian oil. The plan still requires a unanimous backing from the 27 countries in the bloc. Back here in Nigeria, we'll have petroleum products delivered from its national refinery in the first quarter of 2023. Speaking exclusively to Channels Television in Houston, Texas, on the sidelines of the Offshore Technology Conference, OTC 2022, the board chairman of the NNPC Limited, Senator Marjorie Chuba Okadibo, gave assurances that the Port Harcourt refinery is well on course in the rehabilitation timeline to refine crude in the country. Do take a listen.
Port Harcourt, Warri, and Kaduna refinery. And there's really so much you can do at a time. You don't put all your hands in your mouth. We have chosen to deal with the Port Harcourt refinery. We went there, and work is in progress. We have 2 sections of the refinery. I didn't know that we have the old refinery and the new refinery. Right now, work is ongoing on the old refinery. Our projection is that at the end of first quarter of next year, that refinery should be producing about 60,000 barrels. And it's work in progress. It's ongoing. So I think it's something that we really need to trust that it will happen. And Mr. President himself is determined to make that refinery crank.
And now to our first conversation. Well, a low revenue to GDP is an indicator that a government is not collecting its fair share of taxes from economic activity. Nigerian government has intensified efforts to boost its tax income since the drastic slump in oil revenues, which had sustained the economy for many years. In 2016, the government also raised the value-added tax rate by 50% to 7.5%. Money from that has not, however, been able to make much of a difference, subdued by weak consumer purchasing power and an economy fresh off the COVID-induced recession. Well, to discuss this and other matters, we have Mr. Taiwo Yedele, Fiscal Policy Partner and Africa Tax Leader, PwC. Great to have you on the program. Good morning. Yeah, great to have you. So a typical developing economy collects just, 15% of GDP in taxes, compared with 40% collected by an advanced economy. But here in Nigeria, the government collects less than 7% of GDP in revenue. That's definitely a source of worry.
Yes, it is, Ladi. I think many Nigerians don't pay attention to this enough. It looks like, data that has been said over and over again, and it's almost losing its meaning. But we cannot afford for that to really happen because it's important. This is not just about one government or the other. It's actually about society. So even if today you eliminate corruption 100%, you eliminate waste 100%, we'll still be a poor country because at 6% or thereabout tax revenue to GDP ratio, you can barely do anything. And this also reflects in terms of the public expenditure to GDP. Nigeria's tax revenue to GDP ratio is one of the lowest in the world. I think maybe just ahead of a few of the oil-rich countries like Saudi Arabia, Iraq, and Kuwait. We really can't compare ourselves with them. And in terms of public expenditure to GDP, really what we are spending to take care of the people, infrastructure, social services, we are only ahead of Sudan and Yemen. So this is not where we want to be. So we really need to address this as a national emergency that doesn't have to wait for another 10 years. We need to be able to move the needle. What we are doing is mostly taking baby steps. Those are not enough. We need giant stride. We need to leapfrog in terms of transformative reforms that can really improve the level of tax to GDP ratio significantly to at least 15%, which is what we need to start having meaningful economic development.
Yeah, and talking about, steps, how can policymakers actually tackle this, low tax collection level?
Yeah, so first we need coordination. So whether you're talking about vertical coordination or horizontal coordination, even within federal government, you don't see enough coordination with policymakers, monetary, fiscal, debt, even spending, budgeting, and also subnational. You don't see enough coordination. So that's really critical. We need to come together. At the end of the day, the impact we make would affect businesses and Nigerians. And there are no federal government Nigerians or state Nigerians. They just want their lives to be better. So that coordination is critical. The other thing is that we have to be intentional in how we design a tax system. Because we haven't paid enough attention over a long period of time, many of the thresholds we have become obsolete, such that today, I can tell you confidently that we are taxing poverty. So the World Bank just said they're revising the extreme poverty threshold from $1.90 to $2.15 because of rising inflation, particularly affecting food. Now, what that means is the average household in Nigeria is about 5. If you're very lucky, 2 of them are working, usually the parents. And if you do that calculation, if one person is earning less than 70,000 naira per month and you're taxing them, you're simply taxing extreme poverty. And this is the reason why around the world you have thresholds that are sensible enough to protect the most vulnerable people, especially in a country where we don't have the social safety nets to protect people from extreme poverty. Having said that, we should then have to reform the tax system to situate the tax burden where it needs to be, which is the middle class and the upper class, people who have the ability to pay, and therefore get them to pay, and then we can use that to take care of society. Now, political parties are doing their stuff, different ridiculous rates for nomination forms, and we are getting people, coming out like it's 10 naira they're talking about. And interestingly, many of those people haven't paid taxes. They don't even have tax clearance certificates. So tax authorities are now coming up to say, now, if you want to get tax clearance certificates, pay this amount to get it. That's just, we are encouraging tax evaders to become eligible to start managing taxpayers' money. There's no bigger contradiction in the world than that. And we need to address these issues. These are things we need to do, particularly also using technology to improve the tax system.
Quite interesting, taxing poverty at this point. But, a couple of low-income countries like Cambodia, Georgia, Liberia, and Ukraine have been able to achieve some, of the largest revenue gains after, tax reforms. What can we learn from these countries?
Yeah, thanks for that question, Ladi. One thing in life is, and I don't know of any country where everybody is excited to go and pay tax. Even in countries where you can show something for the taxes people are paying, it's still difficult to pay tax. If you add on top of that complexity about the process for paying taxes, don't be surprised when you have 6% tax to GDP ratio. One thing we can learn from all those countries, including many in Africa, from Rwanda to South Africa to Kenya, where they have made significant gains, is by simplifying the tax system such that the process of payment is very simple. The other extremely important issue that we need to consider is harmonization. So we have too many taxes in Nigeria officially. Based on the approved list of Taxes and Levies Act, There are now over 60 different taxes collected by federal government, state government, and local government, when in reality, over 98% of our revenue across levels of government is generated from less than 10 taxes. What we then do with these other taxes is that we create the apathy, we create the avenue for corruption, for leakages, such that the people are actually paying a lot, but government is collecting so little. What people pay is not only the formal taxes, they pay informal taxes to non-state actors, and they pay implicit taxes, taking care of what government should be doing for them. When you put this all together, Nigerians are actually one of the highest tax countries in the world, but their government gets so little because of that leakage in the middle, and that needs to be addressed.
Quite an important matter there. But, another issue is boosting, tax payer morale, at this point to, make them actually want to actually pay these taxes. What do you think is the right path to actually boost, the morale of the average taxpayer out there?
Yeah, no, very important question. We conducted at the Nigeria Economy Summit Group a couple of years ago with funding from Bill and Melinda Gates Foundation. We conducted a national study on tax morale, just to try and understand why is it that the tax, revenue collection is so low in Nigeria. And about 83% of Nigerian adults and almost 70% of businesses don't see anything wrong with evading their taxes. And the reason they gave for this, number one reason is they said we do not trust governments. Number two reason is they said they do not get the fiscal exchange for the little that they have paid. And these are very, very, very important and instructive, right? If you don't trust government, it's difficult to part with your money. If you don't get the fiscal exchange for what you have paid, it's difficult to pay more. And the way to address the two, in terms of trust, you need transparency. How much is government collecting? From who? From where? How much are we spending it? A governor should not just come and tell us they built road and then we should start clapping for them. We need more than that. Did you spend 10 billion when you should have spent 2 billion? Did it take you 15 years to complete instead of 2 years? Who did you award it to? Do we have vested interests? People in government. And in terms of fiscal exchange, once you have this transparency and better communication, people can see taxpayers' money at work, and therefore they are less reluctant to pay. We've seen a bit of that in Lagos in the past, and I think this can be replicated across the country.
Yeah, transparency is key for that to actually happen. But the government is proposing new tariffs and levies, for 2022 to put the economy on a recovery path. But what can we expect, from these? We've seen manufacturers and business associations already kicking at this point.
Yeah, I'm not sure that any country can, introduce taxes to be able to make the economy recover. It's almost like, again, a contradiction. Government needs more money. I don't think there's any need debating that. But how we are going about it is what many of us have reservation about. So when you introduce new taxes, those taxes are excise duties on, non-alcoholic beverages. There are higher rates for education tax. By the way, education tax, the rate has been increased. And I was just looking at the data. Over the past 10 years, Nigeria has collected over 2 trillion naira from education tax. Yet, we can't see the improvements in the education system, and lecturers are on strike. And you really ask yourself, where are these monies going? Who is explaining how they are being spent? 2 trillion naira is not a small amount of money in 10 years. I do admit it's not enough, but we need to show that we are responsibly spending the money we've generated, no matter how little it is, and that will create the impetus and motivation for people to contribute more. So when you keep introducing new taxes, National Assembly is discussing a tax for NYC scheme. There's also a bill for tertiary health care. There's another one that is to do with police fund. There's another one for science and engineering. We've done this for so many decades, and they haven't worked. Why do we think they're going to work now? We need to do things differently. Learn from other countries that are reforming their tax system and harmonizing not only their taxes, but also tax collecting agencies. Why do we have Nigerian Customs and we have FRS as separate agency? Why are they not merged together? And these are some of the issues we need to deal with. I do not think that introducing new taxes or raising the rate of existing taxes will solve our problem. We need something more fundamental. In fact, we should repeal so many of the existing taxes and focus on very few high revenue yielding, broad-based taxes. In my view, it should be less than 10 altogether.
Quite interesting. And, this is all coming at a time where inflation is high. We're seeing new highs globally. Household incomes are being squeezed. Firms are experiencing rising costs of inputs with global central bankers, raising rates. And I ask myself, how do you, improve your revenue from taxation with all of these headwinds?
Yeah, and this is where the coordination, I spoke to earlier on, comes in, right? So when you have to deal with all of this, it's not easy for anybody. It's not easy for the US. It's not easy for Europe. Nobody says this is easy. You are dealing with inflation because government just printed a lot of money and they spent during the pandemic, which was necessary, but they're now having to deal with it. On top of that, you have the crisis in Ukraine, which is affecting not only food product, but energy prices. All of these are coming together at the same time. So it's tough to handle this. So what you need to do is a proper coordination of monetary policy, fiscal policy, debt management, as well as investment and trade policies. Ultimately, the way to improve your tax revenue collection potential is to grow the economy. Being mindful that taxes are the percentages of the prosperity of the profit of enterprises and individuals that government collects. If I don't have any income, it doesn't matter whether you throw me off. If anything comes out, it will be blood, it will not be money. So we have to balance how do we deal with inflation, with growth, not only growth that is inclusive. And then for Nigeria in particular, we have to remove impediments to businesses from the port, clearing things, from logistics, dealing with security, dealing with over-regulation, cost of infrastructure. I don't think we can solve all of them, in 1 year, but we have to start, particularly with those that will not cost government money, and those are policy reforms. Once you do this, you will find that there's prosperity, there's inclusive growth, inflation is under control, and even the exchange rate will be also stable.
Which also shows the importance of ease of doing business at this time. But let me take you to another issue. Now, recently, a couple of financial service companies, like the banks, have restructured to, holdco companies. What's the tax implication of this?
Yeah, that's an interesting question, Ladi. And I was deeply involved, since so many years ago. In fact, initially, when banks were supposed to do some restructuring, which was directed by the central bank, they couldn't do it because of tax. They couldn't set up this holdco structure because at the time we have multiple layers of corporate income tax. We call it excess dividend tax. That if you have a subsidiary that's a bank, you pay corporate tax at 30%, pay education tax, then it gives the profit to the holding company, and they also have to pay 30% again. And it wasn't making sense. So many of the banks couldn't do holdco structure. It took Nigeria so long. It was very disappointing for me, over 10 years, to address this problem. It was only just addressed about 2 years ago. And that's why you're beginning to see some of these financial institutions now going back to what they should have done many years ago. We are really just coming in the way of efficiency of running businesses. This is where the tax tail is wagging the business dog. And it has to stop. So it shouldn't have taken us 10 years to address this problem. But I think essentially, banks are looking at what is the most efficient way of running their organization. And where the answer is a holdco structure, now they are setting it up because the tax problem has been addressed to a very large extent.
Quite interesting. So much to unpack there, Mr. Taiwo Oyedele. Thank you so much for coming on the program. Fiscal policy partner and Africa tax leader for PwC. It was great having you, and do enjoy your weekend.
Thank you. Thank you.
Thank you. All right, so after the break, we'll take a look at the market that's defied global market volatilities. Talking about the Nigerian Exchange Group. We also get an outlook for yields in the fixed income market. That's our next conversation. Do stay with us. This is Business Morning. Welcome back. Now to our next conversation. Analysts have predicted that the Nigerian equities market will remain positive in 2022, despite being a pre-election year. A review of the market performance in the fixed income and equities market for the first quarter of 2022 and an outlook for the first half of 2022. We have Luke Ofojebe, head research at Vetiva Capital Management. Great to have you on the program. Good morning.
Good morning. Thank you for having me here today.
Great to have you. Well, the market's positive return year to date has increased to about 19.01%, with the all-share index crossing the 50K level. You know, at a time when global equities are very volatile. How are you seeing this?
Quite an interesting one, really. Nobody really expected the Nigerian market to have returned about 19% by this time of the year. But when you look at the major factors driving this positive return, then it shouldn't be surprising. Rates in the fixed income space are very low. So investors right now want to seek better returns, and that's why they are diverting more liquidity to the equity market. Then you also know that for a number of companies, they've released impressive results, and that has also helped to boost investor trading sentiment in the equity markets.
Right, but do you see any resistance levels, looking at the market, at this time?
Yes, but not really strong enough to halt the positive run in the coming quarters. The reason I said this is because since late 2019, early 2020, is the local investors that have dominated the equity markets. And for these local investors, they are not usually long-term oriented. So when they see significant gains within a couple of trading sessions, they start taking profits. So what this means is that they start selling down these equities. So maybe in the coming trading sessions, we might see more negative sentiment because investors want to take profits. But the reality is that over the course of the year, we should see more positive buying sentiment in the equity markets, mainly supported by impressive corporate releases, as well as the low yield environment in the fixed income space.
Right, and a couple of analysts have said this run is due to more of local investors participating in the market and less foreign investors. So I'm wondering if the foreign investors actually come back, what can we expect?
Right now, coming back, it's a dream that doesn't look like it's going to take place at any point in time. And that's because there are risks to watch out for. I see the foreign exchange risk. Looking at what's going on in the forex markets, the dollar is trading at around 600 naira in the parallel markets. At the NAFEX window is around 415 naira. So there is a wide spread between the official and parallel market rates. So this further heightens the risk of further devaluation going forward. So we think that will keep foreign investors on the sidelines. Then we also have the issue around 2022 being a pre-election year. Talks around politics should start gaining more momentum in the second half of the year. And that should further dissuade foreign investors from coming into our markets. So for now, it's going to be more of local investors. How are we going to see the foreign investors come back to the markets? Not anytime soon, not even next year. It's going to take a lot of drastic changes as regards some economic policies before these foreign investors can visit Nigeria again.
So basically, local investors don't care that it's a pre-election year. They're ready to just wait the market out and keep investing. Is that what you're saying?
So it's all about managing your risk at the end of the day. So you want to know if you still have appetite for equity investments despite these risk factors. Yes, 2022 is a pre-election year. But when you look at what the fixed income space is offering you, you have about 3 to 4% return at the end of 1 year. Then you start asking yourself, this is not even enough to beat inflation, which is currently around 16%. So that might induce you to increase more funds in the equity markets. But that said, even in the equity markets, you still want to manage your exposure. You want to invest in stocks that are fundamentally sound, like Guinness, Access Bank, Zenith, Dangote Cement, WAPO. Even in the telecommunication space, like MTN, Seplat, these are stocks that are fundamentally sound, and they've actually returned, impressive returns so far in the year. So these are stocks investors will still continue to maintain exposure to, even in the second half of the year.
Yeah, and looking at the consumer good counter, we're seeing that perform well. About 2 days now. What do you think is driving that?
Oh, quite surprising, really. So at the start of the year, the expectation was that a number of these consumer goods companies will struggle because of heightened inflationary pressures. You know how the competition in that space is very stiff. So they actually struggle to pass on higher selling prices to their consumers. But looking at what a number of them have done so far in the year, looking at their Q1 results, a number of them reported significant growth in top line as well as bottom line, and that's why we saw like a late charge in consumer goods stocks. Within the last 2 weeks, they've returned up to about 15 to 20%. The likes of Guinness, Flour Mill, quite a number of them. And the expectation going forward is that we might see more positive run in these stocks as local investors begin to buy more of these stocks going forward.
Yeah, and some industry experts, have the view that the capital market, remains the surest regulated investment medium to beat inflation in Nigeria. Are we saying this because it's in a positive trend right now?
I think you get comments like this when the market is going up. So typically, people will always want to sell the equity market in situations like this. I think we just need to understand what's really driving this stock performance. Like I said at the start, rates in the fixed income space are very low. Before now, institutional investors like your PFAs, that's your pension fund administrators, used to prefer allocating more funds to the fixed income space. But given that rates in that market are very low, a number of them are increasing their exposure to the equity market. And that has really helped to support trading sentiment in that space. Also coupled with the fact that despite geopolitical tensions going on all over the world, where equities are trending downwards in the US market, in the European market, you see more of downtrend. Here in the Nigerian market, we've seen more impressive corporate releases despite rising inflationary pressures. And we think, this will continue to support, trading sentiment. However, in the second half of the year, when, politics starts, heating up, there is a likelihood that investors will want to slow down on their exposure to the equity markets and play more in the fixed income space. Although in the fixed income space, we expect them to stick to short-term instruments, like your 1 year or 2 year instruments, in order to avoid duration risk.
Right. And look, I remember last year, when the global equities market was had a good spell, was in positive territory, but the NGX was in negative territory. So I'm wondering, is there some kind of inverse relationship between the Nigerian equities and global equities market?
Not really. Although the policies of the CBN, in a way, have been to isolate the Nigerian market from other developing markets. Because if you look at the trend in other developing markets, quite a number of them have raised rates in line with rate increases in the US. But that's not the case for Nigeria. Instead, the CBN is still leaving rates very low in order to support economic growth. And that has really benefited a number of companies in the REIT sector. And we think this will continue to bode well for them, although it's not sustainable. At some point, the CBN will have to raise rates in line with what's going on in global economies. But for now, it should be a major boost for domestic players. And that should translate to positive sentiment in the equity markets.
And right, we know how positive sentiment in any market attracts new investors that also want to take part in the profits. But you're looking at the market right now. How would you describe the risk-reward trade-off for new investors looking to get into the market right now?
Right now, I think new investors should be very cautious. Very cautious. At this point, they should be very price sensitive. Because the likes of Guinness has already returned more than 100%, trading at around 110 naira. Same for Seplat. We've seen the same thing for Fidelity and a couple of other stocks, really. So right now, new investors should be very cautious because any moment from now, investors will just start taking profits and they start selling down the stocks. Like I said, the domestic investors are not long-term oriented. They are not going to hold on to these stocks for the next 2-3 years. After some weeks, they are going to start selling, and the likes of Guinness can drop back to around 90, 18 naira. So for an investor that is buying it at 110, that indicates a loss. Same thing for Seplat, same thing for Fidelity Bank. So for new investors, they need to be very price sensitive, and they need to watch out for stocks that have not really moved significantly. The likes of Julius Berger, Lafarge Africa. So these are stocks that are still trading at attractive prices that I believe new investors can actually pick at this moment.
Right, so that you don't end up buying the top, when you enter this market. But looking at, the first half of 2022, what stocks are on your radar, going forward?
So at the start of the year, we at Vertiva Capital, we came up with our top conviction stocks that range from banking to consumer goods, oil and gas, and telecommunications. And so far, these stocks collectively have returned about 42% year to date. A number of them have rallied, but there are some that are still trading at low prices. The likes of Zenith Bank, Waco, Dangote Sugar, Dangote Cement. These are stocks that I think that can also pick up in the second half of the year.
Right, and these are very interesting times in the market. But for the fixed income space, what are your expectations for yields?
Interesting one. I like this question. Quite a number of investors really want to know what rates are going to look like in the second half of the year. So the thing is this. The CBN is still pro-growth. The CBN still wants to support economic growth in Nigeria. And that's why the CBN will continue to leave rates relatively low. But the reality is this. At some point, we are going to see upward movements in rates in the secondary market. And that's because of inflationary pressures. Inflation currently is around 60%. Given what's going on in Russia, Ukraine, disruption to the supply of a number of global commodities, in the second half of the year, we should start feeling, the rise in the prices of these commodities, and that should further, increase inflation levels. So we do believe that in the second half of the year, we are going to see rates inch up, maybe by 100 basis points or 150 basis points. And that means that at this point, investors might want to allocate more funds to the fixed income market. However, we need to retrace that. Even though we expect rates to increase in the second half of the year, we are not going to see rates rising to as high as 9%, 10% in the fixed income market. So that means rates are still going to be lower than pre-pandemic levels of 12 to 13%.
Right. So much for investors to look forward to in these markets, and not an easy time to be an investor, I must say. Thank you so much, Luke Ofojebe, Head Research, Vertiva Capital Management. It was great having you on the program, and enjoy your weekend.
Thank you for having me today. Thank you.
All right, now we have Ini standing by right there with more market details. Great to have you, Ini.
Good to be here too, Ladi. Thank you so much. I heard you saying that these are not easy times
for investors.
I don't think I agree with that, because
but your NGX investors are
you need to look at the NGX
very well.
You need to look at the NGX. I mean, we hit that all-time high and we are sustaining it. So, I mean, these are good times for investors in the NGX in Nigeria. And,
really good times.
But we don't know how long it will last, because, once it's just a cycle. Once the market gets up there, then people want to invest.
No market goes up forever.
No way.
Yeah.
All right, so let's see the details of how the market traded yesterday. Yesterday, the market was up almost 1.5%, and that's building on the previous day. The previous day was just about 1%, but it went up 1.5%. Equities cap 27.406 trillion naira. And let's see those who drove that. We had the volume and deals in the red compared to the previous day, but value really over 39% up It was about 6 billion naira the day before, and then it went to 8.3 billion naira yesterday. That's, I think that was about over 330 billion naira added to the market's value yesterday. So you can imagine what's happening to your shares if you do have any investment in the NGX at this time. I hope you're not running back there now to go and take profits because that will bring us back down. And then we saw a decline or a flip in the banking sector. That was GTCO and Zenith. I believe that profit taking may have already started. Consumer goods did really good yesterday, 2.36% up. Industrial goods, just a little bit up. The MTN Nigeria was a major driver of the market yesterday. Well, to give us more details, we have Abdul Rashid Momo, is a trader with TRW Stockbrokers. Good morning, Mr. Momo. Good to have you on the show.
Good morning. How are you? Hope you can hear me clearly.
Yes, I can hear you clearly. So these are very good times. These are very good times for equity investors in Nigeria, and it seems like we're not feeling the crunch that other markets are feeling. What's the secret?
Well, where do I start from? This market, even from the period of COVID, is been bullish till date. Markets, we're looking at some figures as per resistance levels. I think about 48,000 points. It got there and it broke that level on huge volume. So as it is now, we still have other resistance, but when let me explain it. When water is in a pipe and there's no room for that water to go up, that the pipe finally bursts, will finally break out. So that's what we are seeing in the market now. The bulls have been choked for too long.
So the pipe is burst now. Is that what you're saying?
Yes. So it's a free flow now. Everybody's trying to see because I'm in green now, except I think Lotus, NGX Lotus, everything's in green. Everyone's looking for what to buy. And basically, when you compare what's happening in the economy and actually what's happening in the stock market, the companies have actually all the financial we've seen so far from the keywords actually giving the yes, we'll still see profit taking along the line. But again, when you see big stocks like MTN, Airtel, Dangote, when those seplat, when those stocks sneeze, everything goes up. So stocks are actually riding on the backs of all the big players, actually the ones moving the market. You see Okomo, you see Presco, they've hit all-time highs, and I'm not seeing any correction soon.
Okay.
So I think what we should do is just enjoy the bull.
Let's enjoy this bull ride.
Just enjoy it. I know it cannot be forever, but enjoy it while it lasts.
Okay. So I'm just curious. I noticed Presco and Okomo, they seem to be catching investors' attention at this time. Does it have anything to do with Indonesia? They had banned exports of palm oil. Does it have anything to do with, or what's turning eyes to these stocks at this time?
I like to break things down. Every Nigerian now is a trader. Every Nigerian is a trader. The awareness is high. When they said there was Ukraine and Russia were the largest exporter of wheat, you know what happened to bread? All of a sudden, everybody starts to adjust pricing. So you just answered the question. You just said what's happening in terms of oil in those countries. Everybody keys in, and it's not only in terms of the commodity, the physical oil. We're talking about the market. Anything that has relation with that product would go up. The last time we spoke, I was telling you guys about manufacturing companies, production companies like Cadbury, PZ, Unilever. You can see what's happening. Oil price, seplat. So the market is very sensitive to all the information that's on ground now.
At this time, it's investors are smiling. Would you say this is a good time to get into the market?
How like enjoy the ride. That's the only thing I'll say.
No, but,
For those
if
who
you're
miss
out
the
of
bus,
the bus, can you jump on the bus at this time? Is this a good time to jump
you
on the
wait for
bus?
it. We call it you wait for retracement. You have to wait for retracement. If you miss the bus, you wait and you go in because so far so good. I don't as long as those financials still look good, the market is good to go. And mind you, market has a cycle. There's this adage that says sell in May and go away. You
Away.
understand? But in Nigeria, it actually happens in June. But for the past 2 years, it has broken that adage of selling in June. Even from June, things start to spike. So far so good. I think even if people lose out now, the second quarter financials we still go to rub on what we are seeing so far. So I think so far it's going to be a win-win.
All right.
It's going to
Well,
be a win-win.
I know you said that you don't see, you don't see profit taking anytime soon, but isn't that what we saw on the banking stocks yesterday? GTCO and Zenith had a lot of buy-off.
You know those sectors, especially the banking sector, they are the most volatile when it comes to trading in the market. They have the volumes. So like for me, someone that is buying, let me explain. Someone that is buying Okomo now, I don't see Okomo coming down because the volumes are not even the volumes are not available. You understand? But the banking sector at any point in time, you cannot see a bank shares now like Zenith or GTB moving for 5 days, no matter how good that result is. There will always be profit taking.
Okay.
So all those stocks, we are talking about volumes here. We're not talking about its volume, and it's very liquid. So at any point in time, people will definitely take profits. But stocks like Seplat, MTN, Dangote, Airtel, those are the stocks that you're actually holding on to the market. That's what we're. And when those stocks move, others.
And the market moves also. All right, thank you so much, Abdurrashid Momo, trader with TRW Stockbrokers. Thank you for the details and analysis on the markets. Enjoy your weekend. So, Ladi, there you have it. It was a good day. It's been a good day. It's been good trading days for equities in Nigeria. Not very active in the fixed income space, but I know you discussed that earlier with your guest. And MPC is coming up really soon, so we do hope that maybe that will bring some life into the fixed income space.
And really not an easy time to be trying to get into the bus, you know. You're seeing all of this profit and you're like, I want to jump into the bus, but at the same time, you don't want to buy the top.
Wait for the bus to slow down.
Exactly.
And then you can get on.
All right, thank you so much. All right, so after the break, we'll drill down on more markets. Do stay with us. This is Business Morning. Welcome back. Time to drill down on more markets. Now, we saw heavy sell-offs yesterday in the crypto market. We saw Bitcoin down about 8%, followed global equities markets like the NASDAQ and the S&P 500 that fell to new lows. See, the Bitcoin market actually followed that. Let's look at the market cap this morning. It's $1.67 trillion. That's down about 6.85% this morning. That's the market cap for the total crypto space. Volume traded $115.98 billion. That's up about 14.33% from the sell-offs we saw this morning. Bitcoin dominance sits at 41.45%. We see the price of Bitcoin there, $36,412. Massive drop there for Bitcoin this morning from yesterday. And we see Bitcoin actually struggled to clear the 40K resistance, but it formed a high near 40K and started a fresh decline to levels not seen in a while there, 36,412. And we see the price of Ethereum there, $2,743. That's down up 6.35%. We know what happens once Bitcoin sneezes, the whole market shakes at this point. Top also market cap is all red on that counter. We're seeing double-digit losses across the market at this point. All right, let's bring in Michael Enaji now, digital market analyst. Hello, Michael. Good morning.
Good morning, Letty. Thanks for having me.
Yeah, happy, heavy red Friday, Michael. Massive sell-offs we saw yesterday on the NASDAQ, Bitcoin, S&P 500. And it all came, after good news, the market reacting positively to, the Fed's 50 basis points increase in rates, but wasn't as aggressive as the 75 basis points that was expected. But that rally did not last. We're seeing massive sell-offs. What's moving the market at this point?
Yeah, so most people thought that a Fed that is 25 basis points lesser in terms of how much they were going to tighten, the pace of they're going to tighten rather than 75. Powell said that he's going to be looking forward to 50 basis point increases. And so the market in the brief moment found that bullish. But in no ways is that actually bullish, because what you actually realize it entails is rather than go 75 basis points, we're just going to go 50 basis points, which is not that big of a spread in between the two. Ideally, most people would actually like the Fed to act faster. But in no way is it bullish. I think it was just something that provided a momentary time of relief, and so that just gave us a relief rally to where we are. Like I've been saying, I don't think economic conditions are going to get better anytime soon. I do think as the Fed tightens and ratchets up their efforts to taper down the monetary supply, I really do feel Bitcoin goes much lower, at least to 24 to 28K, and it could go as low as 16,000. But this is just the start of that unwind.
Wow.
There's still more downside to come.
I guess that's the crypto winter most people have talked about right there. But looking at other news in the market, we saw BitMEX founders paying $30 million and no jail term for breaking bank secrecy laws. What are you hearing about that?
Yeah, so it's $30 million that they want the three founders to post up, and the founders are asking that there be no jail time, actually. So right now it's looking like they will not receive jail time, as this is one of the first cryptocurrency convictions that we're seeing the CFTC bring down for breaking anti-money laundering laws. So this is the first precedent. I doubt they put the whole they put the whole law book down on them. I really do think it's not as intense. They're not going to see any jail time. Arthur Hayes has pleaded that he wants to have the ability to travel, and he is no longer working in the crypto industry, so the risk of him reoffending is very low. So overall, the odds probability of them facing jail time is very low. But the $30 million they definitely have to pay,
right?
Which is a drop in the bucket.
A real drop there. All right, Michael. Well, but interesting to see how the market plays out, over the weekend. We know the crypto market doesn't sleep, and we're seeing these sell-offs start at this point. I wonder where Bitcoin is going over the weekend and maybe till about next week. But let's see how it all plays out. Guess it's a red weekend expectations. All right, Michael, thank you so much. Always great to have you on the program, and enjoy your weekend.
Thank you, Laddie. You as well.
All right, now look at the top five gainers this morning. We're seeing more of stable coins, and Anchor Protocol there up 14%. Anchor Protocol is the only one that's not a stable coin that's up this morning, up 14%. The rest are stable coins. Shows that traders are running into stable coins to try and protect some of the profit they have in there. Flip over to the top five losers. We see Zilliqa there. Did start a run recently, but that's erased with this 20% drop this morning. And we see Step in there also down 20%, double-digit losses with ApeCoin there, down about 16.82%. And Axie Infinity also taking a hit there, down 14%. So it's a really red market we're seeing in the crypto space this Friday. All right, that's it for the crypto market. And that's it for the show today. Thank you so much for watching. And remember, we at Channels Television do not sell or advise on securities or cryptocurrencies. All we do is track the market as a news source. All right, thank you so much for watching. It was great having you this week. Enjoy the weekend coming. I'm Ladi Williams. Bye for now.